the area where we're going to see trouble. And we've, I think, already begun to see it with the tripling of wheat, rice, and corn prices between early 2007 and the spring of 2008. Now, prices have receded from that level, but they have not gone back to historical levels. And what I now think is beginning to happen is that we're seeing water shortages beginning to translate into food shortages on a much larger scale. As many of you know, half the world's people now live in countries where water tables are falling. And if you think about it a bit, what this means is that as we expand irrigation and do more and more overpumping, we artificially inflate food production. We inflate it because it's not, we can't sustain that, that increase. The World Bank estimates that in India, 175 million people are now being fed with grain produced by overpumping, which by definition is a short-term phenomenon. Our estimate at the Institute, comparable estimate for China, is that 130 million Chinese are being fed with grain produced by overpumping. And much of this overpumping is under the North China Plain that produces so much of China's wheat and maize. There are other countries, smaller countries, where the food bubble is beginning to burst. The most dramatic of these is Saudi Arabia. After the oil export embargo in the 1970s, the Saudis realized they would be vulnerable to a grain counter-export embargo. And so they began looking for water, and using their oil drilling technology, they found a fossil aquifer about a half-mile down. A fossil aquifer is a non-replenishable aquifer. This is water that was laid down eons ago in geological time. And they've been pumping that aquifer and have been self-sufficient in wheat now for more than 20 years. But the year before last, 2008, they announced that that aquifer was largely depleted. And if you don't have irrigation in Saudi Arabia, you don't have grain production. So they said they were going to phase out wheat production over the next 8 years and would be out of wheat production by 2016. In fact, in the last 2 years, their wheat production has dropped from 3 million tons to 700,000 tons. I mean, it's almost in a free fall. And within the next 2 years, they'll be out of grain production, and will be totally dependent on grain imports for their 26 million people. This is particularly dramatic, this drop, because Saudi Arabia is totally dependent on irrigation, and their irrigation water is totally dependent on a fossil aquifer. But I think we're going to see substantial declines in larger countries like India because of aquifer depletion. The Indian government, as one of the governments, now classifies data on their water resources. It's a security issue with them, and they prefer that these data not be publicly available. It makes it difficult to do the sort of calculations that we like to do. But of the big three grain producers, China, India, and the United States, it looks as though irrigated area has peaked in both the United States and India, and may have peaked in China, but it's too difficult to say. If the irrigated area has peaked in the US and India, it has probably peaked for the world as well. What this means is that the world may be facing peak water and peak oil at more or less the same time. Both of these affect food security. I mean, peak water for the reasons we've just been discussing. 40% of the world's grain harvest comes from irrigated land. That land may be irrigated either from underground water resources, as it is primarily in India and the United States, or from surface water resources, river systems, as it primarily is in China, except for the North China Plain. Now, what we're looking at is, I think, a tightening food situation. For one thing, once we have the capacity to convert grain into oil, it ties the price of grain to the price of oil. If oil goes from $80 a barrel to $100 a barrel, the price of grain will follow it up. If oil goes to $150 a barrel, the price of grain will move up accordingly, because we can now convert grain into oil. And so, as the price of oil goes up, it will pull more grain out of the food economy into the energy economy. Because if the market attaches greater value to grain to produce fuel than it does to produce food, the market will move the grain from the food economy into the energy economy. And this underlines another important development, which is we used to have a food economy and an energy economy, and they were largely separate. Now they're beginning to merge. And again, I don't think most economists have yet realized that the price of grain is now tied to the price of oil.